we go. Well, Jeff, you're still in your jacket after running back from. How are you wearing a jacket today? Is that a jacket?
Oh, best. Yeah. All good.
Oh, I see. I thought, maybe it's colder in Chicago than I thought.
It cooled off today a bit, but it's not too bad.
Okay. All right. Well, listen, we had a lot of interesting things going on today. You and others talking about inventory numbers. I thought we might start there. AJ, I don't know if you saw it, but AJ just posted some information saying that sales of automobiles overall are up 1% year to date. But looking like the second quarter was down. But then I asked him what was the quarter over quarter difference, and he hasn't gotten back to me yet. He was showing it was down from last year. So you've been noting some things about the inventories and how that might be impacting car sales. What have you been finding?
Yeah, what I've seen is basically flat to single digit sales depending on the auto manufacturer. Improvement in sales, or some are slightly negative, but it's basically everything's kind of hovering around zero. But their inventory levels are growing anywhere from 20 to 40%. The best company besides Tesla at managing their inventory and keeping their days of inventory down is Toyota. And they're up about 20% in inventory year on year. But most of the other companies are up 40% or more. Here's some other data points on the EV. This is all ICE, in hybrid and everything that they sell. On the EV side at GM in the first half, for every 2 EVs that they produced, only 1 was sold. That'd be the equivalent to basically Tesla building about 800,000 in the first half and only selling 400K. Like, what would the market do with that?
Right.
So and Elon's talked about there's some deep discounting going on with other EV brands, but even in their total, like everybody viewed like hybrids was the savior, and
Right.
ICE vehicles are doing fine, and you look at the kind of GM and Ford, they're beating and raising, or at least GM was beating and raising on their sales and their guidance. But as soon as you go one layer under the hood, and that's what AJ and others like myself are doing, and you look at the rise in inventory versus the rise in sales, basically any rise in sales is being dwarfed by the elevation of inventory. So they're basically shipping into inventory. And their balance sheet, so that's finished goods inventory, that's in the wholesale dealer network. Their factory inventories are also growing pretty dramatically. So these are piece parts, unmatched sets, unfinished vehicles, even finished vehicles, but that haven't gone to into wholesale, and those inventories are ballooning as well. So this is basically the auto. And I had a space with kind of a Tesla bear, Brad, and we were talking through this in a really thoughtful way, and he agrees that based on all these metrics, the auto industry is definitely kind of entering into it's in a slowdown. And my whole thesis, and like, how does this come back to Tesla, is the Tesla with their 18 days of inventory. It's very low. It's much lower than any the next highest is Toyota, around 30.
Right.
And just to give you some other numbers, like Ford and GM are in the 75 to 90-day range. Stellantis,
Total vehicle?
many of their vehicles are over 100 days.
Total vehicles.
And Stellantis overall is in the 80 to 90-day range. Wow. On inventory, days of inventory. So yeah, they're going through the roof. And to put this all in the context, if they're entering into a slowdown, Tesla entered into that slowdown faster because they have lower inventory. So they're going to see these issues sooner. Mm-hmm. And the fact that their processing times in the factory are faster, and they've even gotten quicker. And the fact that they do a very high percentage of localization around their factory means their end-to-end network, it's the supply chain lingo, but they're kind of their network latency is probably the shortest of anybody building an automobile. So from that raw material supplier to that consumer receiving a Tesla, that network span and the number of nodes are minimized and smaller relative to the competition. So they would, if there's a slowdown, they're going to see it faster because they're not buffered by a bunch of inventory and channel. They're going to see it faster, be able to react faster, and then they're going to come out of it faster because they don't carry all the inventory. So I like the move Tesla did Q1 to Q2. They could have kept their build numbers high in Q2 and drove gross margins higher. They didn't. They made the decision to get the working capital off the books, get that inventory down from Q1. That was a result of those supply issues. And just coming full circle, I think Tesla's going to come out of this faster than the others.
All right. So with that in mind, I have put out a theory. You might have heard about it. Maybe you didn't. Maybe you watched one of my videos about it. But I have a theory. You and I might have talked about the first part of this theory previously, which is once FSD is complete, well, not even complete, I'm sorry. Once we have unsupervised FSD, how's that? Because FSD complete, somebody was challenging me on the lingo the other day. To me, FSD complete means when all of the parking and reverse and summons and all that is done. And that is the point at which Tesla can claim 100% of the money that's been set aside, the money that's been held back. Is that your lingo? Is that what you would accept as the definition of complete?
I don't think it's ever going to be complete, but I agree with your thesis is that they are going to be able to claim various milestones of maturity to where it's, they are going to be able to claim another higher level milestone of maturity and then be able to release anything that's being held back for that. But I don't have those numbers and figures in front of me to comment on them with any great level of detail.
Yeah, I was just looking at the basic features that at some point they're going to say the FSD is complete, and that doesn't depend on reaching level 4 or level 5 or supervised or any of that. These are about the features, not about the fact of whether or not it's supervised or not. All right, so
I think smart summon's a big piece of that. Yeah.
Right. So then once we actually do have, though, the unsupervised version of FSD, at that point, the value of the car is going to be dramatically and more obvious to everybody. You'll be taking your neighbor on one more ride. Elon will be offering, free rides to people. The uptake on FSD will be faster, but it will also mean people coming into the store, coming into the retail environment just to get the FSD. Whether they were on the fence or whether they're thinking maybe they get an electric car someday, once it's obvious that the car can literally drive itself, there will be a bump in sales just based on that. And I think you and I have talked about that before, is that so?
Yeah.
Maybe by the end of the year, we would see that kind of a bump. The new part of my thesis, and the part that I got a little blowback from Larry, but Brian thought it was a very good idea. Anyway, is that the entrepreneurs will start jumping into the game when it's close.
Did you say entrepreneurs?
I'm sorry. I have
entrepreneurs.
Entrepreneurs. I don't know why I have such a hard time pronouncing entrepreneur when I am one.
I think you were emphasizing Trump in the middle, but I just want to make sure, just clarifying the announcement. Yeah. Entrepreneurs. Yeah. Got it.
People that are thinking that they might like to have a fleet of these, whether it's a fleet of one or a fleet of hundreds, will start to initially enter into the used car range, and they'll start sucking up all the used cars out there. And once there's a glimmer that it's really getting close, I think the first thing that'll happen is there just won't be any used cars available. People go out and grab those until the price is driven up to where it doesn't make any sense anymore. Does that make sense to you?
Yeah, but you'd have to be really getting, glimmers of Robotaxi capability. Like you'd have to, you'd have to be getting really close to that. And like I said, and what I'm experiencing myself are these jumps and these releases now in terms of performance are much greater. Like what I was driving 2 months ago versus what I just drove. I drove from the city of Chicago back, an hour and 45 minutes without touching anything. And it just, what the rate of improvement is increasing rapidly.
And we have the 10-10 date coming up. And as somebody who's been making those kind of decisions my entire life about, what's happening in the market and do I want to get into a specific business or not, I've started over 40 as I've been trying to make those decisions about maybe something that's going on in my old industry, the bicycle industry, or in this advertising specialty business, which we were heavily involved in. I'm not making that decision 3 weeks after the announcement. I've got to make that decision before the announcement, or I might not be able to get the product. I might have to pay too high of a price, etc. So I think the smart guys are going to start buying a few weeks ahead of when they think the rest of everybody else is going to start, buying those used cars.
Yeah. And just the only other thing we're battling are the interest rates. Used cars are over 10%, I think, in terms of the interest rate. They're up to 14%. So you're getting a lot of people just blocked out of loans. But yeah, I agree with your theory. I just don't know how quantifiable it's going to be and what percent of those people are. I remember kind of harkening back to like the Cybertruck delivery event or some of the recent vehicle delivery events and people ordering like 50 vehicles, at least putting reservations in like, oh, they're going to be Robotaxis.
Yes.
When they're delivered. And, it's 2024, mid 2024. And, to call a spade, we don't have FSD running on a Cybertruck yet, much less a Robotaxi capability. But I think we're close on FSD. That could be within a month. And yeah, I get your point. They've got to hedge. They got to get in front of it. Otherwise, that supply of vehicles, there may be an issue with it.
Right, especially on the used ones, which you can get inexpensively, and it'll still be perfectly good robotaxis.
Yeah,
and in fact, the people like Brian Wong, for instance, who has 9 or 10 Cybertrucks on order, if you're into it and you're playing that game anyway, you realize that if it takes an extra couple of months or even an extra 6 months or whatever, they do quite well on Turo. So you can rent them out all day long. It's a much more complicated business than putting them out on Robotaxi, but it is still a pretty easy business compared to running retail stores or doing manufacturing. Right. So, and this business will be very easy for those who want to be involved in it. It's going to be it's such an easy business to do. Little bookkeeping and making sure the car's maintained is about all there's going to be to that game. But anyway, so then my theory goes a little further than that. Is once you really have robotaxis on the road, and maybe even again before that actual day, but at the point that there are whatever regulations are satisfied, whatever cab regulations, which would be on top of, driving in the back seat regulations. I don't think there's a lot of regulations in most places, but there are some. But at the point that that becomes true, now you have the entrepreneurs coming out of the woodwork, so to speak, and buying cars, and that ultimately should pop the price, the availability of cars, pushing back the delivery dates, and ultimately Elon's going to have to raise the prices.
Well, I mean, we have to understand why is Tesla to align with your point. Why is Tesla guiding to 50% higher production next year? And the fact that it's not just a car anymore, it's a car that drives itself. And certainly, just fast forward to where we're going to be 6 months from now, you have to wonder, you have the new interim vehicles coming out in the first half. You have the start of production of the compact or the whatever you want to call the next model, the unboxed model. That's not even included, by the way, in that Tesla reported capacity of 3 million. They're not including unboxed in that. And Tesla has a history of calling their production pretty close to what it actually ends up being. They have a history of doing that. Yep. So, and I had this kind of bull bear debate discussion on one of the spaces, or like, why do you think that's happening? And there's not really, on bear side, there aren't great answers of, oh, maybe this is the year they're going to be wrong. Like, well, they have a history of being right. So
Yes.
what do they know that we don't know? And this is the thing that keeps me up at night in a good way. Um, because those jumps in production based on kind of like where the economy is today,
Mhm.
that's surprising to me to see that. I expected an increase in production, especially with these new models coming, but I didn't expect anything in this magnitude. So I wonder if there's a couple of tricks up the sleeve that we're just not aware of.
Yeah, so that would be one thing that I would think would be a major boon. But then here comes my big question. And I don't have, Elon hasn't spoken about this at all. I've been talking about it probably for 9 months. And that is, how in the world is this going to work and still include, a family that doesn't want to commercialize their vehicle? So I want to keep my vehicle. No, I'm sorry. I want to buy a new vehicle. I don't want to commercialize it. I'm not going to put it out into the Robotaxi network. I want to pay $8, $9, $10, $12,000 for my full self-driving, or I want to pay $100 or $200 a month, in a subscription. But then on the other hand, you got somebody that wants to commercialize it. That individual is going to turn right around and call me up as soon as I get my car and say, I'll give you 50,000 over what you paid. Because you now have a car with MSD and there's nobody else has any available. So we're going to have this arbitrage situation unless there's a differential, unless there's a difference between what FSD is costing for the regular consumer versus the commercial user. And so my theory is that whoever buys the car, you want FSD, let's say it costs you 10,000, but if you want to up it to commercial, you want to be able to get the capability to push that button on your app, then it costs you an extra 50 or whatever the number is, but some kind of a number that puts you into the commercial business.
Yeah, I think it's going to be market driven, because you got to look at what's the cost per ride today, and you want something competitive that's going to drive volume and move miles over to your system.
Right.
So I think it's going to be market driven. I don't know. I think at a high level, there probably will be a price differential between the private FSD unsupervised user versus the commercial. I could see there being a different cost structure. I can also see it like once you put your car in the network, you also have some sort of monthly fee that's basically, you paying for the upkeep of the actual network, the app, all the infrastructure that's supporting it and so forth, and anything else involved. So I could see also some sort of recurring fee being charged. That may be part of it as well. Or they add it to just the normal monthly payment. But here's where I think it gets interesting. And you saw this insurance announcement in China. By the way, the biggest uptake in FSD is going to be when Europe,
Yeah.
rest of world, and China are approved on
Right.
it. And I think it's imminent.
Yeah.
I think it's imminent.
At
I
least
think
in
this
China.
12.5 series, I think this 12.5 series has put Tesla, and this is not talked about. I think we're all excited about it and what we can drive and what we can do in North America, only on hardware 4 right now. It's going to get the hardware 3. But I think this is the release that is really putting it into play, where this is something you would put abroad and you would feel good about. So this could be the one that the biggest uptake in FSD and the biggest increase in income to Tesla from FSD is going to be getting these global approvals. And then what happens? Then you're in this position now where you've got global exposure to this, because I've played around with the numbers, and and by the way, anybody who reports FSD uptake that's not Tesla is probably wrong, and probably very wrong. I would go off of whatever Tesla, guides, and whenever they give any input on that number, I would go off of that versus going off of somebody else who thinks they can know this. So I guess where I'm going with that is this is going to be a kind of a monumental event when they can go wide with FSD. And I think 12.5 has been and will be the key to that. So I'm looking forward to seeing that. I'm also looking forward to maybe at some point a license agreement being announced.
Yeah.
Like,
Yeah.
I think these milestones are really, I think we're getting we're getting closer and closer to these milestones as we get closer and closer to 1010. And it is interesting to me. It looks like the 12.5 series release was the release that was going to be the basis for what we would have seen on Robotaxi Day. Now, obviously, they would have turned it on in some other functionality or what have you, but it feels like it was that series of releases. So it's interesting how stable they got it and how great they got it for the week of 8.8.
Right.
And then where will this thing be 2 months from now?
Right. Right. For sure. All right. So, and of course, they did have that meeting over the weekend, which there was not a peep about that I saw with Samsung and Hyundai. Or as my wife
Yeah.
said, it's really Hyundai, I guess, not Hyundai.
Yeah, that could have a number of conversations around fab capacity, high bandwidth memory supply, just all the other components Samsung supplies, and of course Hyundai. Um, they, they're going to probably be number two in the U.S. at some point soon on EV, and I know they do a lot of spare part production too for other automakers, so these are two very important people for Elon to both meet with and also kind of partner with and align with. Because TSMC, back on the Samsung fab side, TSMC is actively raising prices because they can.
Yeah.
And quite frankly, they're dealing with tremendous complexity switching over from H100 to H200 with NVIDIA, everybody else ramping their products for the fall. So they're under that those fabs in Taiwan they're just getting crushed right now. So they're raising prices. They can raise their prices. They've got a captive audience, but this is where Samsung comes in. They've got the node technology to really compete with TSMC. And I think that's one of the key conversations Elon was having.
Probably. Now, speaking of those folks and that whole part of the industry, Nvidia is now down 30% from its all-time high, and it's only got a PE of 58. And I was wondering if Ross Gerber has offered his services yet.
It's that may be its current P. Its forward P has got to be well below 30. If you just look at, or I mean, if they're going to earn $5 a share, depending what you put them on, they're at, they could be somewhere between 20, 25. They could be getting into the teens here pretty soon on forward PE. Depends what number you put them on.
Yeah.
But there's been a lot of, I think, really irresponsible reporting regarding this Blackwell delay. First off, any new silicon launch is very complex. There's multiple chips involved. It's not just this one Blackwell chip. There's many. And each one of these chips has their own individual mask. And there's multiple masks, to serve a production quantity and size. Maybe some of the masks were delayed. Maybe they want to do a design change on some of the future masks that weren't built yet. But until you hear from NVIDIA, like, hey, we said we were delivering this thing in Q4 and now it's, next year, it's not delayed.
Yeah.
And there's a lot of rabbits they could pull out of the hat. Number one, this is all unsourced, unconfirmed reporting. And I think it's irresponsible. The main reason I think it's irresponsible is if you notice how Elon refers to GPU capacity, he calls them H100, H200 equivalents, meaning he's taking both. He's ready and willing to take both. They're still undersupplied on the H100, so they can hold their pricing high. And as they keep that volume high on the H100, their costs are coming down. So their gross margins are actually improving. And if they let's say there is a delay on Blackwell, for the next 6 months, that first 6 months of ramping that whole series of silicon, their yields would have been lower, their processing times would have been higher, their capacity, their utilization would have been worse, their costs, their margins would have been worse. And they said they're not necessarily charging more for that one either. So this may be actually a net benefit for NVIDIA, and just people are not calling it the right way. And they've got earnings in a couple of weeks, and what has every hyperscaler done? They've come out and said, we're holding to our guidance or we're increasing it. And then they're increasing it for the second half of this year. And they said, if you think that's big, we're going to spend more next year.
Yeah. Yeah.
So that's been the commentary. And AMD has an MI 300 solution. I'm not sure the software is where it is, like we're relative to where NVIDIA and CUDA is. So you can't just think of it as shipping chips. It's the software to actually
Right.
run them that NVIDIA has with CUDA that is really the secret sauce behind it. And I'm not sure where AMD is on that, but I know they raised their guidance as well. So you have AMD raising guidance. You've got every hyperscaler saying they're going to buy more, and you have people checking out of NVIDIA. I mean, do your own research.
That's right. That's right. So taking a quick look at the Tesla stock today, it was down before the market went down. I kept looking for any kind of news that I thought could justify it. Couldn't find anything. You think this could have been options play, given all of the volatility of the last couple of days, that maybe there was some because Tesla, I don't know if they have been the last 2 weeks, but typically they're the number one options play out there by a lot. Do you think maybe because it happened so early, do you think that might have been what was going on?
Yeah, I'm not good at speculating on daily moves, especially
Right.
when there's no news.
Right.
But it could be anything. This stock moves around. A 5% move on this stock is not like a
Right.
5% move on Apple. It's just how the stock trades with its volatility. So it's not surprising. The question is technically where are we at, in the downtrend? I would say closing below 200 wasn't a great thing. And, the question is, are you closer to 170, 175 than you are to getting back to 220, 230?
Right.
You're in this kind of, no man's land period in terms of deliveries and milestones and updates from the company. And, that's where it leaves you. But there's no update from the company that says anything is operationally delayed. Like a launch event for Robotaxi doesn't have anything to do per se necessarily with the readiness of the network. So we don't know when that network was actually going to be ready for production deployment. Let's say it was, April of next year. I'm just making up a number.
Right.
The hardware change, the reported hardware change they did on the front of that vehicle, that's already, done and tooled up, and it's already in product. So, while it feels like a momentary delay, we don't know what the longest pole in that scheduled tent really was. I believe it would be actually getting the full network ready, operational, and of course getting regulatory approval to operate as a taxi.
Okay, let's take a quick look at the overall market. Jamie Dimon thinks that we are most likely going to go into recession. He says he doesn't think we're in one yet, but he gives it about a 60 to 70% odds of going into a recession. Market Watch adds to that data, saying that the consumer credit rose by only 8.9 billion in June. Economists had expected 9.7 billion. The use of credit in the 12 months ended in June advanced by only 1.9%, which is down sharply from 5.3 a year ago, the yearly rate. And typically the use of credit only rises that slowly around a recession, a sign that households are feeling more financial distress. My feeling has always been it was the consumer that was going to run out of money, but we've seen now that businesses are not spending money on CapEx. We saw Airbnb with lower numbers, and Disney saying the parks are slow, not horribly slow, but slow in their reporting today. What are you thinking? What are you thinking? Do you think we're in the recession now? Do you think it's almost here? Or do you think there's not going to be one? We're going to have a soft landing.
If we encounter a recession, it will be in chunks and phases and various things. Like we could be in a housing one for all we know right now. Number one, the window for a soft landing definitely got tighter over the last month or two. We've received discouraging macro data points, mostly on jobs. While we don't have a massive unemployment problem, we've gone up from 3.6% to 4.3%. We're above the Fed's target of 4%.
Right.
So the Fed's got two mandates: jobs and inflation. Inflation is trending below 3% towards 2.5%. and jobs are over the mandate. I don't know why they didn't cut. I don't know why 3 weeks before the July meeting that they weren't signaling to the markets that it may be time to go. I think it would have been received better. I don't think it would have changed the macroeconomic data that is concerning everyone, but at least they would have known that the Fed is, the Fed sees it and they're ready to go and they're with it and they're moving quickly. So I think the short answer is I think the window for a soft landing has gotten tighter, but not necessarily closed.
Mm-hmm.
And there's people like Jamie Dimon that have been calling for a recession, a hurricane, all these different things for 2 or 3 years. So you have to look at like the signal versus noise coming out of these sources and just understand like, where they're at. So yeah, I think the window is tightened. I think the Fed is behind the curve, officially behind the curve now, and they've got to catch up. So I think what you're going to see is I think you're going to see the rhetoric change.
Mm-hmm.
I think you're going to see the rhetoric soften out of the Fed. And I think you're going to see them cut in September. We have CPI, PPI next week. That will be a critical input. The jobs number tomorrow, like even the weekly jobs number will be a critical input. And we'll see where we're at. But yeah, there's definite signs of slowing. But then we had, Monday, we thought it was going to be a market apocalypse. And then at 9 a.m. Central in the morning, we got this ISM services, the Institute of Supply Managers, and there's a product survey and there's a services survey. And these are the purchasing managers that do procurement for services.
Mm-hmm.
And they, the expectations for that number that was going to be in a contractionary number below 50, like 46 to 49 for those various surveys, and they were all coming in over 50.
Mm-hmm. Mm-hmm.
So they exceeded expectations and they were in expansionary levels, not off the charts, like way ahead, but better than expected. And I think that put a little bit of a stopper on the path down. So that was an encouraging data point. The bond purchases was that yesterday, the 58 billion of the threes, that one went well.
But today's 10-year did not.
Okay.
Missed by 3 basis points.
Okay, so that probably was part of today's issue.
Yeah. And then the other thing about the ISM survey the other day on the services and also the S&P survey, which came out at the same time, both of them equaling each other, but that is rear view mirror. And what I was concerned about there is that the big numbers on there were the big services that they were saying were the strongest were the transportation and leisure. And now we've got Disney and Airbnb 2 days apart saying doesn't look good going forward.
Look out.
Yep.
Right.
So I'm trying to figure out what's going to hold up the economy. It's not going to be the government anymore. They don't have the spend. Yeah, the spend for the government has to be already in place. And there's no spend in place for the third quarter like there was last year's third quarter, which is a big reason for the big jump, like 5.3% on the GDP. So I don't
just take the auto industry.
Yeah,
just take the auto industry.
Yeah.
When you have 9% rates to buy a new car, 14% to buy a used car, you have 3 million people in the US that are attached in some way to the auto industry. And you have the Fed funds rate running 300 basis points above inflation.
Right.
You have a problem.
Yeah. No doubt about it. That's what I've been seeing. That's why I continue to say it started in June. The consumer ran out of money in June. The small and medium-sized businesses stopped CapEx in June or July, reduced their CapEx plans in June or July. And now the services side, as we go out of summer and in travel and leisure is less in the off season. I think I'm trying to find a shiny penny somewhere that's gonna keep us from going down into negative GDP. That's all.
Yeah, this feels a little bit like when they got a little bit restrictive in 2018 Q4, and then they got yelled at like, "Hey, fix this now. I don't think there's anybody yelling at the Fed now. I know they're supposed to be separate, but you've got, uh, you know, anyway, do I think that this is all the Fed? No,
No.
but they control monetary policy. They control the rates where the rates are, and they control, a lot, they control money supply. So
Yeah.
they have a lot of tools that they could, if they needed to do it. I mean, look what happens when the Bank of Japan just literally, it's just words overnight. They said, "Hey, we're gonna cool it
Yes.
on hiking rates until the markets stabilize." And boom, our futures flip from blood red to the shining green. And then, like you said, we probably got that bond auction this afternoon, and it really took us for a ride.
Yeah, it's interesting. The bonds actually are with last time I looked, the bonds were okay, sliding just a little bit in the pre-market. I don't know if it's still the case, but that's where they were a few minutes ago.
Yeah,
My
kind of a big
computer.
move up. We're getting back, the 10 years getting back up towards 4 again.
I know
So
that's the weird part. It's just hard for me to imagine that it's going to. Oh yeah, so what in the world? What am I looking at here? I think it's my, I think I'm getting bad signals here. I definitely am. It's, I don't know if everybody can see this or not, but the computer is actually saying that the bonds are up 3.913 as opposed to being at 3.913. So I've never seen that
yeah,
kind of a glitch before. That's pretty funny. Anyway, yeah, but we're still okay, so there you go. We are only 1 basis point difference between the 10 and the 2 right now. So we are very close. Now we did switch for a minute the other day and went positive for a minute, and then it switched back to about 10. But as we're standing right now, we are 1 basis point different, 3.913 and 3.92. So that's interesting. That's another supposed signal, if it does flip, that we are in the recession already. So that'd be the SAM, copper down, commodities down, auto sucking, housing sucking, and then you've got the flip on the 10-year, 2-year. That's an awful lot of data points to suggest that we're there already.
right, right. So yeah, we're at a. I mean, you look at what's going on with volatility in the VIX. I mean,
Yes,
that thing spiked to 65 on Monday.
but it didn't end up. If it
From
ended up at 65, we should have all put our money in the ground or something, because that would
yeah,
have been the all-time high for a close.
yeah, and then I think we got down to 22 today. Now we're back up at near 28. So yeah, there's definitely volatility has increased. We were in the low teens for months, and that's also, I mean, it's another sign of the markets are not settled here in terms of processing some of this. We had some this hyper SMCI earnings, um, those kind of caused a little bit of a ripple. They were down big today. There's some other tech stocks that were down fairly big. Some doing okay, but so Bitcoin's all over the place, and that whole complex too. So yeah, there's definitely some increased volatility, during this period of time.
What is your take on crypto? So crypto is down 17, 19 for the day at 55,000, way below its range. Its range recently. What do you think is going on with Bitcoin? Everybody thought it was going to be a storehouse of value, but it's
Yeah,
to be anything but.
it's not the port in the storm. If liquidity starts, to me, it's a proxy for liquidity in the equity markets, and I think as that starts contracting, crypto, I mean, crypto contracts. So it's not, there's not some, it's not some port in the storm that people are going to and say, oh, it's safe here. Um, it's hard to value. So people, when you're in a situation like this where you've got a lot of forced selling and a lot of just downward pressure, people are going to take the highest risk assets um and deal with them first.
So we have the NASDAQ down 0.9. 161 in the pre-market. You've got the Dow down 0.41 or at 161. I'm sorry, at 38.7. That's down 159 points. And the S&P also down 0.65 or 34 points. So call it, Jeff. We going to go to full bear?
Well, it depends how the market acts around, I think the 200-day for the S&P is around 5,000. Maybe it overshoots it a little bit, maybe 49.50, but if it reacts well there, then I think you're okay. But if not, then yeah, it's hard to say. But yeah, somebody called this a bear market the other day, and we're not
a bear yet.
We're not in a bear. They called it like, oh, this was the rally on Tuesday. Like, oh, this is a vicious bear market rally. I'm like, we're not in a bear market.
No, I think you have to call it a correction. We've seen the 10% on the S&P and the Dow, and we've seen 20% on the NASDAQ. But I think in order for the NASDAQ to be in bear, given its massive change, what do you want to call it? Delta, I guess you could call it a delta between the other two. I think you have to be at 30% on the NASDAQ to really call it the bear. But
officially it is 20. I mean, officially the definition I think is a 20% move. So
yeah, well, you've got them on the NASDAQ already. So you can say the NASDAQ's in a bear, but I think we need more to really call the overall equity market in a bear. But that is my call. I'm still saying S&P and Dow go to 20.
I'm only seeing 16% on the NASDAQ. Not that it's great, but I'm only seeing maybe
as the low or as today.
I'm looking at the peak in the last 6 months versus the lowest point today, and it's about a 16% difference.
Today, but wasn't it lower previously? So I think the NASDAQ touched on 20. I could be wrong. It's hard to keep all.
We're at.
Oh, are we at the low?
Yeah, we're at where we were Monday. We're just a little bit lower than that, actually.
So let's see the month. Okay, so yeah, it's the low for the month. Okay. All right, 16%. All right, so I take it back. Not quite
still bad
yet.
It's enough.
Yeah.
Yeah, I mean, it's enough. Well, we can stop here as far as I'm concerned.
You'd be okay with that, okay?
Yeah.
All right, hey Jeff, thank you so much for jumping on after driving hectically back from. I guess it's not that hectic when you've got FSD.
Yeah, much more relaxed.
Much more relaxed. All right. Well, thank you as always for coming on Wednesday night. And I think we agreed a lot tonight. That was we need to find some stuff to fight over.
We'll figure it out.
All right. Thanks again, and to all of you out there, as always, it's been great talking to you.